I want to show again this move before the move, like what could tip it off, because that's the job, right? The job is to make predictions before they happen, or they're not very good predictions. And so if you're trying to get short for whatever reason in this area, what could keep you out of that short and anticipating maybe an up bar coming? Who cares if the up bar goes 5 handles, 50 handles, or 2 handles? You have to get 2 handles before you get 5, before you get 10, and so on. So if you look at our numbers down in here, they're pretty small, but they start to get out of whack. You see this red line, it pops in and then fills in, and you get like a 35 to single digits on the right side, which means there's a lot more shorts coming in than longs, and then it pops. All right, so if I play it, you're going to see this number grow and become ratio-wise much bigger than this number. And then it is a prelude to a pop. You see the red coming in, that's more shorts. There it is, there it is. So this number, this ratio becomes wider, and you get this rally. And the rally, like I said, doesn't have to go 100 handles or something. You got to predict the first few points before you predict the next few points, and so on. And then back over here, it's like, how could you not get stuck short? Everybody wants to get short a lot of times emotionally after it breaks. And one of the reasons is your mind says, well, it went down, it's going to keep going down, get short. And so many people, especially early in their trading careers, get caught reaching. So if you want to get short and you find yourself short in the hole, what does that mean? That means you're short down and reaching at a bad location. And instead of already being short from up here, you're late, and you end up getting short in the hole. Now, one thing that could keep you from that is you see, again, all these shorts coming in. You see all these sell pulses, which are sell aggressive orders of over 100 come in, and price gets above there, which shows some rejection. So there is a chance that this move is transitional and the market's going to stay weak now because it goes through a couple important lines we have. But you also don't want to get caught in being short and reaching. And once you see this disqualifies it as maybe a location to get short, because you get not only one, but two, but three aggressive sell market orders, and yet price isn't down here, is it? No, it's higher than the sell orders. So it's important to, and you could see me drawing in real time some of the numbers and some of the balance. And it's like, I think that at that point we could come up here and maybe go down, but you got to qualify or disqualify it when it gets there. You see me drawing in real time, and it's like, this ain't the location to short it. But if it could come back up in here, then you pay attention to our numbers to see what they're telling you, because what do you want? You want to see a lot more longs, not getting into this area, but after it's in it, pop in. And you end up getting the opposite. So if I fast forward it, you end up getting this chop, 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 and then bam, this pop that either gets you to disqualify the short or get you out of a short before 2-3 more points of heat. You got to be able to predict it's going to rain before you're wet.